Welcome to Share It Today. Today, the topic is bad debt and provision for bad debt. Today, in this session, we will learn what is bad debt, how to record a bad debt, what is the accounting entry for bad debt written off, what if you recover the amount. So, firstly, what is bad debt? Bad debt refers to loans or outstanding balances that are no longer deemed recoverable and so it must be written off from the company's account receivable. Incurring bad debt is part of the cost of doing business with customer, as there is always some difficult risk associated with exceeding credit or extending credit. So how to record a bad debt? To record the bad debt entry in your books, debit your bad debt expenses account and credit your receivable account. What is the accounting entry for bad debt written off? So for example, I have made a working note over here. So let's see. You have made a sale of 50,000. After many months, you discovered a loss. Okay, you have made a sale of 50,000, which is a credit sale. So when you are making a sale, the entry is cash account debit to Mr. A, sale or sales account. When you are making a credit account, account receivable, account receivable, account receipt, account debit to sales. Okay. Okay. So this is the entry when you're making a credit sale. So after many months, you have discovered that this amount, 50,000, the sale figure, debit and credit. Okay. So this amount is not recoverable. So it's written off in your book. It is no more recoverable. So this amount is called as bad debt. Or if you have received partial amount of 25,000, you have received a cash for 25,000 and partially for 25,000 you have to make a bad debt entry. So because that is a bad debt, it's no more asset for the company. Okay. So understood? So what is a bad debt? How to record a bad debt? What is the accounting entry for bad debt written off? So today, let's write over here, year 2023, okay, this month, you discovered that one of your debtor is not going to pay 25,000, okay. So you'll make an entry, bad debt account debit to sundry debtor. So this is not a accounts receivable. This is particular debtor because you haven't received an amount from Mr. A. So bad debt account debit to sundry debtor, Mr. A, for 50,000. So now bad debt account comes under P&L and sundry debtor is SL. Sub ledger which comes under accounts receivable which goes into current asset. So by end of the year, so you have made this entry. So by end of the year, for transferring bad debt at the end of the year, the entry will be because bad debt, it is a loss for the company. So profit and loss account debit, you have to debit profit and loss account to bad debt account. So profit and loss account to bad debt. So by end of the entry, you can make this entry so that bad debt account debit to sundry debtor, profit and loss account debit to bad debt. So your entry is closed over here. So next, this is in the year of 2023 we said, right? So in the year 2024, in the year 2024, you have discovered that you have received, you got the money, somehow you got the money, at least for 10,000 or 20,000 or whatever it is, you got the money. Okay. So when you're receiving a money, when you got the money, when you recover the money, what do you get? You get cash. So debit the cash. Cash account debit to bad debt recovered. Make this entry to bad debt recovered. Bad debt recovered comes under income. Okay, don't put bad debt over here. Make a bad debt recovered entry, which is in income, which is a credit side of the profit and loss account. Okay, this is debit, this is credit. So the closing entry will be bad debt account recovered account debit to profit and loss account. So you will not take any customer name because customer is already closed. Why do we not taking any customer name over here? Because customer is already closed. You have seen over here. Customer is already closed over here. This particular customer is already closed for 50,000. 50,000 is already closed. So don't take his name. Make a separate account called bad debt recovered under income. So while closing, make a bad debt recovered account debit profit and loss account. So the next topic is provision for doubtful debt. So we are making a provision for doubtful debt, for doubtful bad debt, provision for doubtful bad debt. Okay, so you all know what is bad debt. Unrecoverable account is bad debt. Okay, so what is doubtful? When you say doubtful, that means might be, might have not get this amount. These are the receivable might become irrecoverable. So we have to make a provision for this. So is this provision for doubtful debt is necessary in a company? Yes, provision for doubtful is very necessary in a company. It is mandatory to have a provision for doubtful debt account. So how much provision is made every year in the company? So suppose if you have a okay, provision for doubtful debt is always on accounts receivable. For for a year, suppose if your receivable is for 200,000, okay, your receivable is for 200,000. This is account receivable, not the sale figure, not the customer figure. This is the sale figure for the period, for the whole year 2022. Okay, year ended 2022, 2022, you'll be having a 200,000. So 2 lakh or 200,000. So here, how much provision is made every year? The amount has been decided on a past history. So that means in the year, suppose the provision is made on 200,000, 2%. So that will become how much? 4,000. In the year end of the year 2022, I made a provision for 4,000. So how do I make this entry? We'll see this later. Okay, how do we make this entry? First, let's understand what is provision and how to make a entry for the provision. So in 2022, there was a provision of 4,000. Okay, so even on 2023 year end, you can make a provision depend upon the sale of 2023 year. Suppose 2023 year you have made a 2,50,000. That means 200,000 to 250,000. So make this provision on 250,000. So this means based on the history of your bad debt rate, the provision has been made. How to identify bad debt? So bad debt is equal to total bad debts divided by total credit sale. So total bad debt is for the last year is 5,000 divided by total credit sale is 250,000. Okay, 250,000. That means 2%. Right? You understood this? Bad debt is equal to total bad debt divided by credit sale into 100 to get the percentage. So that means 2%. So based on the payment history of a bad debt, you make a provision. So now let's see how to record a provision for doubtful debt. Okay, let's understand this provision for doubtful debt with example. The provision is made at the end of the year 2023. For the year 2023, we have made a provision of 250,000. So we have made an entry, profit and loss account debit to provision for bad debt. Profit and loss account debit because it is a loss for the company. Provision for bad debt. Provision for bad debt is a contra entry which comes under accounts receivable, which comes under current asset on the in the balance sheet. Okay. So we have made a provision, profit and loss account debit to provision for bad debt. So in this year, what happened in this year? In 2023, there is a bad debt. There is a bad debt in this year. How much is the bad debt? 2,90,000, 290,000. Okay, there's a bad debt. So what is the entry you pass? So I pass bad debt account debit to sundry debtor from Mr. A. Okay, there is a bad debt of one of the customer, 290,000. If there is a provision, we have to charge bad debt to provision. If there is a provision, we have to charge this bad debt to provision. Okay, else directly you can charge it to P&L. How we did over here, we directly charge it to P&L, right? So in this example, we have a provision over here. We have a provision of 250,000. So you have to charge it back. So provision for bad debt, how much? 250,000. Account debit. Profit and loss account, 40,000. Bad debt account, 290,000. So 250,000 plus 40,000 is 290,000. So end of the year, so this entry, the treatment for this provision for doubtful debt is done by end of the year. So now the provision is zero, right? This has been credited and this has been debited over here. So the provision is zero. At the end of the year, you can make a new provision based on the AR. So in 2024, in the year 2024, take out your AR receivable, total AR receivable, okay, AR receivable. On the basis of that, AR receivable, on the basis of that, you can make a provision for the next year, okay. So in this session, we have learned a bad debt, the treatment for the bad debt, okay, and how to close this at the end of the year or it. Okay, thank you very much. Let's grow together. Hope you enjoyed. Bye bye.